Welcome to Classic Value Investors and Microcap Explosions. My name is Mariusz Konieczny, and today with me we're doing another shipping update with Robert Bugbee. Robert, thank you very much again for joining me.
Thank you, Marius.
Yeah, so some weeks passed by. I've been watching both the tankers and the bulkers quite closely. Can you take a few minutes and maybe do an update? Let's start with the tankers. I noticed some rates have been going up lately on the product tankers. So can you address this?
Sure. We've had a quite constructive period in this last, let's say, 2 weeks. Rates have gone up in really all of the categories that we have. In the last week, the rates went up significantly in the big LR2s, and we saw that in the LR1s. And we've started to see, let's say, a smoother upward position in the MRs, in that some of the MRs markets in the east are actually moving up as well, with the LR1 and the LR2 markets. That's really encouraging, as we've explained before that the third quarter is the weakest quarter. You just want to really get through the third quarter, and to the degree that the third quarter hasn't sort of completely collapsed relative to third quarters, then that sets up things well for for the winter period.
So the rates going up on LR2s, LR1s, and MRs. What's behind these moves? Is it destocking or refineries coming back online?
Destocking would actually take the rates in a perverse way downwards. But I think that destocking is going on, which means that that means that the headline demand is actually higher than what the fixtures would represent, because there's been destocking. I think that what we've had is just a simple increase in demand, because you've got it across so many different geographic areas and so many different classes, and it's really you can't push these rates didn't spike up. Wasn't as a result of I've read various people thinking it may be to do with the U.S. arresting Iranian ships, but this had happened long time before that occurrence. This is just more economic activity, and we're seeing this being supported by container shipping figures, gas shipping figures, LPG figures, chemical tankers, and dry cargo.
I remember last few times when we were talking about refineries, we were talking about how they were operating at a very low capacity. Do you see the capacity increasing at this point?
Yeah, it has increased. It has increased, and it's increased. It's not back to, let's say, normal levels, but it's increased and is. We're seeing just general inventories brought down. If we saw the U.S. Crude oil inventories in this last 3 weeks, they've come down, pretty steeply. I mean, these things are encouraging, that we are able to have our rate structures functioning reasonably well in a period of destocking, and that I think is, as I said, is extremely encouraging.
I think that the rates for the product tankers, they're actually behaving better than the rates on the crude tankers. Am I right?
You are, yes. There's a lot of still. I'm not really follow the crude oil market, so I don't know it in detail. But on just a pure factual basis, the product rates, for their sizes are definitely acting better than the crude markets.
Yeah, and recently Scorpio actually reported the quarter, and you updated the market as to the balance sheet, what you did with the cash. Um, any of your decisions for current or future capital allocation, are they any different based on what's happening in the market right now, or how are you feeling about the situation with your balance sheet at this point?
Well, 2 weeks ago, we had explained on our call that we were feeling confident enough on our balance sheet to start now to move to retiring the most expensive capital on the balance sheet. That we felt that we have enough cash and straightforward liquidity, and as indicated, this if this continues, if this strength continues now, just even where it is at the moment, that will perhaps start to open us up later for the next stage, later in the year, because obviously we're making sure we get through this tough part. So I think that's sort of pretty exciting. The third quarter started better than we expected, better than last year, even better than most years we've had in the last 10 to 12 years. And as I said, if it's unusual to see rallies at this point in the third quarter, so that's very good.
Yeah. Are you having any new conversations maybe with institutional investors, or are you seeing more or less interest from the investment community?
I think last week, was different in the sense that last week we started to have the questions. People are starting to question, what is happening, looking at things better. I think the institutions were very happy to have the numbers of the second quarter posted, happy to see the data on the new balance sheet, and are happy to see that the market had started properly in the third quarter. By the time you got to Thursday last week, let's say we're seeing more interest in our calendar to have one-on-ones. I would expect that to increase as we approach Labor Day, and if these present rates hold in, because from an institutional point of view, it's pretty clear that the risk to the downside risk is being removed by the cash on the balance sheet, the deleveraging of the balance sheet, and the improving market for product tankers.
And the institutions that you're talking to, are they different institutions, or do they follow a particular investing style? Let's say, are they more value funds that are looking into the space, or more momentum type of players? What do you see?
In the initial stage, right now, you're seeing, older friends to their institutions. You're seeing, you're seeing new players that are focusing, let's say, on the value involved. I think it's too early yet to see the momentum and the hedge funds, but I think those would be attracted if we, especially when you've got there's such a big short position out there on Sting, that I think those would start coming in as especially if you sort of crossed 50-day moving averages and started to move upwards in price, or continue to move upwards in price on a technical basis.
Yeah, there was a couple of weeks ago, there was talks of consolidation between Diamond S and Hafnia. Do you have any thoughts on what was going on and in that situation and how it can play out?
I think you misspoke. I think those talks were Ardmore and
Yes,
Hafnia.
yes, that's what I meant.
Yeah, and obviously we're not privy to those talks, but I think that I think the more important thing is you're seeing the sector players looking to consolidate. You're seeing that in Hafnia's case, they see they're seeing the opportunity of the market with the actual stock pricing being weak and wanting to expand. And Ardmore clearly, doing what they can to hang on because they also see the market improving. So I think it's more confirmatory that the players themselves see the market going upwards, and also, it's more confirmatory also for asset prices that that you've got that type of activity that may be going on. You've got two different approaches. I mean, Hafnia believe in strength, believe in consolidation, believe in large fleets. I mean, we do too. I mean, the fleets are getting bigger. There is clearly a benefit for scale in the industry, and I think we're seeing consolidation underneath. I mean, you can see various of the strong pools have been adding tonnage throughout the summer, including our own pools. So the market does continue to get consolidated in more ways than just the acquisition of companies.
Right. You touched on the Hafnia's wanting to get some expansion, and talking about the expansion, is there any new ship ordering that you see in the market right now?
There's always some ordering, but there's been very little ordering, and I mean very, very little, just sort of ones and twos and threes, and this has led to an order book that's at a decades lows now, probably 20-year lows, and that in combination with a fleet that is which is rapidly aging, and the number of vessels, as people can see on our website, that are approaching 15 years over the next 2-3 years really sets things up nicely.
Yeah. Do you see? Can you touch a little bit about maybe some possible scrapping, or maybe some scrapping is already going on, and the dry docking now that some vessels are coming off the storage duties?
Scrapping we don't really see as very relevant for us in the clean petroleum product market. I think that's much more the dirty products. It's vessels above 15 years old trading in the dirty product market and the crude markets. So in our calculations, we don't really assume any scrapping. Rather, we look at the number of vessels turning 15. I think scrapping anyway I think it's fair to say that scrapping would take a little time. We might see it as regulatory and cost, because people needing to dry dock, and the costs of running older ships, that might force people to scrap. But I think it's too early yet to expect a lot of aggressive scrapping, even in crude, simply because the rate structures have just been so strong that owners would have taken in cash, and they don't normally scrap at the first downturn just ahead of winter, which is that strong season again.
Yeah.
And when it comes to dry docking, the dry docking is going to be a benefit really to all shipping across the board for a little while, because so many vessels had to postpone their dry dockings, and and even now it's not necessarily an easy thing to do with crew changes and various regulations around COVID-19, that people in the height of that would have postponed dry dockings, not just for economic reasons because the rates were so high, but also just not being able to get the dry docking. So on the margin, the dry docking situation should take a little bit of capacity out, and may actually mean that you would have more vessels being dry docked between, let's say, September and January, February, this period, than you would normally have. People wouldn't normally want to dry dock tankers during that period.
Yeah. Okay. And I wanted to ask you a little bit about OPEC because when the COVID first started, they increased production and then they heavily cut production, and then there were talks that they were going to increase production again. So where is OPEC now? Are they did they increase the production, or what's the status of their situation?
Well, they've increased the production into August. I actually think that's one of the reasons we're seeing um, seeing the bid now underneath the big LR2s and LR1s in the Middle East is because as part of their overall production, they will allow refined products from their refineries increases on exports there too. So you know that's that's coming. It wasn't that much this time in August. We're seeing that it's clearly not, let's say, enough generally in the world because we're still seeing those inventory drawdowns happening in quite a big way. But I think that any time you have a change in OPEC policy, it's a little bit like central government interest rate policy, and that there just hasn't been a time that I can remember that the correlation between direction between the health of tanker stocks and the health of and OPEC directionally haven't been correlated.
Yeah. When it comes to oil demand in general, before the COVID, we were
Yeah.
consuming 100 million barrels per day, and then it collapsed a lot, and it started recovering. Do you uh, do you have a sense of where the oil demand is right now at this point?
No, it's pretty. I think we haven't yet had and we know that it's improving all the time. We can see that in the inventory, the combination and the fact that we know that OPEC has increased exports. We know that U.S. inventories are coming down. We know U.S. production has gone up. So we know demand has moved up, fairly strongly. We don't know. We haven't yet got enough data to see sort of, exactly where it is for long enough. I think that in another 3-4 weeks we'll have a better view on that.
Well, it seems like whenever I get on the road, it seems like it just gets a little bit more and more cars on the road.
Yeah, there's that. I think that's possibly. I think that's possibly one of the most valuable, data points one could have on oil demand. Is 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 that, and we're seeing, seeing good signs on truckers, and we're seeing people go out. We're seeing people, whether or not they can fly for their holidays, they're certainly driving to beaches, and they're doing that where they can across the world. I mean, if you only need to Google, UK beaches, and you can see that there's an awful lot of driving going on
Yeah.
to get to those beaches.
You mentioned flying a little bit, and um, I've been hearing people talking about how diesel and jet fuel, because they're not being consumed as much, that they have to be stored, and that would be positive for product tankers. Can you touch on this a little bit?
Sure, but I think that they're adjusting their actual production. Storage has come down quite a lot in the product tanker market. I mean, 2 weeks ago, MRs had fallen from 87 at their height to around about 35. Um, you know, we won't get we won't get an actual data point until midway through this week to see the next change, but we would expect that to be downwards. We the same in it's the same across the actual product board. Is that's the other part that's encouraging, is that this let's say third quarter that started much better than we hoped is doing so in the face of some really, really, really brutal destocking and some, a lot of increase in in fleet supply as a result of ships being returned from storage. So, the refineries are, adjusting to this.
Okay, let's pivot on the to the dry bulk side. What has been happening there?
Dry bulk has been having a pretty good, week or two. I mean, it's all across the board. Whether it's Hanrys, Supers, Kamsarmaxes, Ultramaxes, Capes, all those markets have been moving up quite strongly. Prices have moved up strongly too. Prices had moved up really for the last 4 or 5 weeks. Getting some very you're getting rates now that are all in all in positive rates finally, and so that's really fantastic.
And what was the driving force behind that? Factories restarting, China. Uh,
Again, yeah, I think it's just pure economic demand, and that's the sort of the story across all of these markets. I mean, the smaller handy dry markets are have really had a lift in the last 2 weeks. We don't have any of those, but they are testament that when you've got the MR markets and the handy dry markets working, this hasn't got anything to do with iron ore or it's just pure economics and industrial demand and activity going on.
and during the
And that's
time,
supported by what's going on the gas markets as well.
okay, during the time that this has been happening, how were the dry bulk stocks reacting to this? And if you can compare it to
They,
salt.
they've been fairly, you know, fairly anemic actually. I think that they've been flattish. This week they've been reasonably flat. Salt even went down for 4 or 5 weeks, but I think last week they're starting to adapt. If I look at 2020 in Norway, which is a big Newcastle Max company, they started to have a pretty good week last week. They were they were up from 57 to 60. So most of the dry cargo stocks started to, let's say, move last week. And salt obviously is starting to have had a pretty good week last week too.
When we're talking about recovery stocks post-COVID, I think that the shipping stocks, both the tankers and then the dry bulk, to me seem like a good place for the recovery. Um, and but it seems to me that investors are not buying it. They would rather be buying airlines, everything else except the shippers. I find it very interesting. What do you think about that dynamic?
I think they will. I think they'll but they'll get to them. Um, they'll get to them in good time, and perhaps last week was the start of a turning point to it. That they will get there because you've got short positions and you've got the actual cash involved, and I think this is one of those things that there'll actually be more buyers once they're all 20% higher.
You know, uh, I think that they will move whenever they are ready to move, and I'm saying that
Yeah.
because I remember the situation with gold, for example, when the Federal Reserve and the central banks around the world were reacting to this COVID situation, and people were asking, why isn't gold moving? Why isn't gold moving? Why is it going down? And it's just because it's going to move when it's time for it to move. And I feel it's the same thing with the shipping stocks. People are like, it should be moving already. It's not moving, and they're getting impatient. I think when they're going to move big, and it's going to be a bit of a surprise.
Yeah, I think that I think you could be right there. I think there was, nearly all of the operators. I mean, none of the tanker operators, none of the dry bulk operators are, stressed right now. That all are, they much prefer to have a situation where, their underlying business is solid, and their balance sheets are solid, and their values are solid, and their stock prices are a mess, than the other way around. Because, as you say, I think you're right. The stock prices will move in their own good time. But I mean, for salt, you know, salt is an extraordinary investment opportunity right now. Especially when we've now created a let's say what I would call a real value opportunity in our move. Where we're moving. We've announced that we're looking to make this transition towards the renewables over time. I think that that's a market, the renewable market, and particularly the offshore wind market, has exceptional growth and is growing exceptionally going forward. There are barriers to entry. The returns are very, very strong, and investors across the renewable space are looking for product and pay multiples of book value. Whereas, we can see, across the dry cargo space, it doesn't matter what your favorite dry bulk company is, it's trading at a steep discount to NAV. And there have only been rare points in the history of the dry cargo market where stocks have traded above NAV. And so salt here is in this sort of almost, almost unique situation where its underlying present business is strongly improving, and it has, and you've got this sort of arbitrage between, let's say, the traditional world of shipping and the new world of renewables that is embedded too in let's say the transition process itself.
Yeah. Okay, Robert. Yeah, thank you very much for this update, both on the dry bulkers and tankers. Is there anything else, concluding thoughts that you would like to say that maybe I didn't address?
Sure. I think that people should. I know it's a little bit of a shock for some people, especially some of the Twitterites and the seeking alpha bunch. But I mean, this move that Salt is making towards renewables is, I have never seen the amount of, you talked earlier about institutional interest. I mean, we've had a storm of institutional interest on this particular move. And I think that the money flow there is very clear. And I think that the traditional way of looking at Salt inside this position is just not the way to look at this. You've got to actually understand the excitement that's going on the offshore wind markets. In addition, and at the same time, you've just got you've got this market in dry that's going up too. So I think that all I would add is that it's well worth being willing to open one's eyes and open one's ears to look at this change, because there's a tremendous amount of institutional interest in that stock now, way more than at any point in its history.
Okay.
And that's it.
All right. Well, thank you very much for your time.
Thank you very much, Marius.